Hello and welcome to the Insights podcast series. I'm your host, Anand Daniel. Today, we bring to you a new episode in the Future of X mini series, in which we discuss and try to decipher the advancements and innovations that are underway in categories and industries that are changing fast in these times. As the world changes because of the pandemic and its lingering after effects, the future is coming to us at speed. And this series is an attempt to understand and make sense of everything that's rushing at us. Today's episode is a special one. It is hosted by my colleague Rachit Parekh, and he has with him Nitin Gupta, the founder of Uni. Uni is one of the most talked about fintech startups in the Indian ecosystem, and Nitin is a trailblazer in many respects. The fact that he is right in the middle of the fintech wave in the country makes him well suited to talk to us about the future of credit cards and how it will look like in India. We will be talking to Nitin not only about Uni's journey, but also about the new models around fintech that are gaining traction. We also want to understand how fintech is fighting the traditional Indian mindset of banking and dealing with the old guard of Indian financial institutions. And with that, it's over to Rachit.
So great to have you here, Nitin. How are you? And hope things have been going okay.
Yeah. All good, man. All good. Very excited to be here. Looking
Awesome.
forward to this.
Perfect. So maybe we know you really well, Nitin. Obviously, folks at Accel have known you for many years, and now you're part of the Accel family. But for the sake of our listeners, it would be great to have a quick introduction to yourself, your career, and why did you start Uni, and when did you start this?
Cool. So I'll give you a quick one on this. I'm well practiced at this since I do a lot of pitches. I started my career. I graduated from IT Delhi, computer science engineering. Then I went to Ahmedabad, and I fondly like to say I wasted 2 years there. Never do an MBA right after taking an academic degree. Then I went and joined Lehman in London, did investment banking for a couple of years, and then came back to India and did my first startup called Coach Group way back in 2008.
And why did you come back to India then? In 2008, India was a very different place than what it is today, especially Internet India.
Yeah. So actually at Lehman, I was one of the best paid analyst, senior analyst associate in that class. And my claim to fame is that I securitized a pool of free performing credit card loans in UK, pulled out a AAA tranche. And AAA tranche from a pool of free performing credit card loans meant that it was far higher rated by S&P Moody's than India did. Right, so it was practically a joke if you saw it from a distance. Then Lehman actually sent me home as an expat. I was earning in pounds and paying in, living in INR. And then Lehman went bankrupt. All Lehman India's assets were taken over by Nomura. Lehman Europe and India's assets, and Nomura made me an offer too. But then I think I had become disillusioned with the investment banking industry. I said, what, bahut ho gaya, ab main apna kuch karunga. So I was already in India as an expat. I just moved back to Delhi and started Coach Guru. So that's what happened. Now, entrepreneurship had been on my mind for a long time. Actually, me going to Ahmedabad from IT Delhi was because I wanted to go learn business so that I could start a company. So I've been preparing to start a company since 2003. Finally, 2008, I started Coach Guru. Bootstrapped, couponing company, very quickly became profitable since it was a massive advertising engine. And we eventually sold that business. My second company was PayU India, slightly more popular. Over a 5-year time frame, it went on to become the second largest payment gateway after BillDesk, and it was $6 billion in 2016. I exited that company, took a break for a year, and started to think about what next. At that point of time, I realized that a true measure of entrepreneurship is actually taking a company public, because then you're not tested just for scale and profitability. Public markets also test you for sustainability. It's a true test. And I decided, whatever I do next, I'll do IPO. And I like financial services. So that marriage was actually quite easy, because in financial services, if you achieve scale, doing an IPO is easy. That's how I ended up at Ola Financial Services as the CEO, because given Ola's massive distribution, it felt it will be quite easy to build a financial services business on the back of that. So Ola Financial Services was fun, transformed that wallet company into leading micro insurance player. We were selling 20 million policies a month. We built India's largest pay later called Ola Money Postpaid with 2 million monthly actives and CM3 positive business. And then pandemic happened. That pandemic forces everyone to take, at least forced me to take a step back and think what next. And that's when I realized that the distribution power of any large B2C brand in India can only be leveraged for financial services if you're selling something contextually. I sold Ola Money postpaid contextually. I sold insurance contextually. Great adoption.
Yeah.
But if you sell anything else on that base, it's practically database marketing. And therefore, it seemed suddenly a very, it seemed as hard a task to build a large financial service company inside Ola as outside Ola. And that, you know what, if I'm taking that effort, rather do it for myself.
But you would have been able to go public sooner, go looking at what's happening. Where you,
Well,
that
I might surprise you.
That's great.
I might
Great
surprise you. And good folks at Accel and Lightspeed were very kind enough to back me and said, you know, Nitin, we like your face. I know you just have a paper plan, but we'll back you and give you money. And that's how I ended up raising $18.5 million seed round to build a credit card and pay later card company in India. So that's the quick and short of it.
And going by your experiences, you could have done multiple things in consumer finance, right? Like you've done credit at Ola as well as like other types of products at Ola Finance. You did at PayU, you did payments, and of course you had your experience from Coach Guru also. What drew you towards credit cards specifically and uni?
So you won't believe this. This is actually my fourth attempt at building credit cards or pay later cards. Fourth.
It's a full circle. After securitizing credit cards in Lehman, now you're finally launching your own credit card, and hopefully the new avatar of Lehman will securitize it soon.
Let's see that. So in 2016, when I was in PayU, one of my co-founders, Lakshmikant Vyas, he's my co-founder in uni, he and I teamed up to build a credit card in India in partnership with a bank. And at that point of time, the way we were envisioning it is what Apple Card launched in 2018, right? So we were planning that in 2016. A month before go live, I leave PayU, and a month after, and then the project got scrapped, and then Lakshmi also left PayU and he joined Bajaj Finance. So that was my first attempt. Then at Ola Financial Services, I launched a co-brand credit card with SBI cards, a black card, vertical, beautiful. First time ever, the Visa logo in its center, clean rewards. That was my second attempt, and that's when Prateek, who is my second co-founder and chief product officer in uni, he and I had teamed up in Ola Financial Services to launch that product. My third attempt was again at Ola Financial Services, where we had this Ola Money postpaid and millions of customers every month. We combined that pay later line, that Ola Money postpaid line, with a zero balance Visa prepaid card. No, it was a MasterCard prepaid card. And this combination resulted in a product which, for a customer, felt like a credit-led payment product, free of cost, right? Like a credit card. And that was my third attempt. And after these three attempts, numerous failures, numerous understandings, uni is my fourth attempt. Now, why am I making that attempt? See, if you look at any economy, right, and payments in that economy, 70-80% is actually dominated by credit, and this credit comes for free. In India, also, the share of credit-led payments was close to 60% in 2015. But then, from 2015 to 2021, right, the entire electronic payment landscape, digital payment landscape exploded thanks to UPI. Number of people who are transacting digitally are way too many, and credit has not been able to keep pace. Credit-led payments, their share has actually dropped from north of 60% to closer to 30% now, and UPI and other electronic payment means non-dominant. And if you go ask a user, right, will you pay from a bank account or will you use free payment credit line or free credit line? Free credit line will be the default answer for most.
Yeah.
So there is this increasing gap. To quantify this gap, right, there are today 35 million Indians who have a credit card, but there are 150 million shoppers who transact digitally online. There are 190 million Indians who have a presence on bureau like CIBIL, right? So the gap is way too much. Yeah. And over the next 5 years, you expect that about 100 million Indians will have a credit card or equivalent product. So 35 million growing to 100 million. And today, these 35 million Indians hold about 60 million cards. And tomorrow, these 100 million Indians will hold about 200 million cards. So that 60 million cards will go to 20 million cards over the next 5 years, right? So the market opportunity is massive.
Yeah.
Very, very massive. Now, the beautiful thing about a credit card business is that the market value attributable to 1 million customers is almost $1 billion. Look at SBI cards, 12 million customers, 12 billion in market cap. Look at HDFC Bank. 25% of the profits comes from their credit card business. It's a $110 billion bank. So conservatively, at least 25, $30 billion in market cap is coming from their credit card business. And they have about 14, 15 million credit cards, right?
Yeah.
So there are 60 million credit cards today in India. The market cap attributable to 60 million cards is about $60 billion. Now imagine this market tripling up over the next 5 years.
And if I pause you there, like you just said something interesting, which is that like these guys are already big, HDFC cards, SBI cards, every bank has their own credit card and credit card system. What's preventing them from capturing the next 50, 60, 100 million users?
I think nobody is.
Yeah.
I think nobody is. But I think there are two trends which are additionally visible, right? And I think all banks will need to step up to these trends. The first trend, which is visible across the world when you look, right? Customers are saying, I expect my financial services partner, financial services, whoever is giving me that financial product, to be of the same quality as an Amazon or a Zomato or a Big Basket or a Flipkart, right? The customer service, the features, the experience needs to be really, really cutting edge. But if you look at existing credit payment products which the banks provide, right, they're more functional in nature. You manage your life around it, around their constraints, instead they being magical for you.
Yes.
So for example, redeeming a reward points is still a pain, right? You jump through hoops to get to that end goal. Or understanding your card statement or doing analysis on your transactions is impossible today. Just can't do it. Damn, simple things like tracking your refund is impossible in your card statement today. If by God's sake you got an add-on card for your family member, right? That family member will still get the OTP for that add-on card on the primary phone number. Right? Small issues, but still not solved for. So the first big trend which has happened across the world is that the experiences of financial products have become magical for the consumer. And the features have become way too many. It has become very, very intuitive to use and intuitive to do things with it, right? For example, why did UPI happen? Why does my UPI does not work on a credit card? Simple question.
Yeah.
So that's the first opportunity. And if you can do that really well, then you have a play in this 200 million card market. You also get a right to win because you're offering a superior product than what is being offered out there. The second opportunity, which I think is actually larger than this, is that in any big growing market, sub-segments emerge. Right? Look at any market when it starts. Look at the smartphone market 10, 12 years ago. There were literally 3 or 4 launches in a year. Today, there are like 4,000 launches in a year. Right? Somebody wants a bigger screen, somebody wants a cheaper phone, somebody wants a fingerprint, somebody wants an iris scanner, somebody wants a large battery. People have different needs. Same for any segment you can think of, from e-commerce to travel, right? Different segments have emerged. But when you look at credit cards, they are still, the value proposition is still too reward centric.
Yeah.
I'll give you 30-day credit, and in turn, I'll give you rewards. That reward may vary by quantum or by merchant type or by category type, but they haven't really solved for new specific use cases. Hey, I travel foreign a lot. I don't want to pay 3.5% markup. Can you make it 0? Or I do a lot of UPI transactions. Can my credit work on UPI? Hey, my family and my domestic help and my children need an add-on card. Can you make a better suite of add-on products? Hey, you know what? I really care. I revolve sometimes. I really care about the interest rates. Can you reduce it? But in different customer segment, different needs.
Yeah.
And that is a big opportunity itself. Right? You solve for different problem statements of people by doing different things. So if I may continue, right? At Uni, the first product that we have launched, it actually stems from a very interesting insight. The insight is that most people where household income is less than equal to 30 lakhs, right? They go through a liquidity issue once or twice a year. So there will be a 40,000-50,000 rupee gap between their income and their expenses. And the expenses may be high because of any reason. They bought something for the home, they took a holiday, they paid school fees, which goes quarterly, they had a medical emergency, they repainted the house, or they were changing jobs and full and final did not come, or the sales bonus did not come, right? And people don't want to take a loan for this 40,000-50,000 rupees. It's a 3-4 month problem. It will go away, right? I don't want an EMI on it. So how do they deal with it? They borrow from friends or family, they break a fixed deposit, or they revolve on the credit card.
Yeah.
This simple insight led us to launch Pay 1/3, which is a Visa card, works everywhere Visa works, and it divides all your transactions into 3 parts paid over 3 months at 0 additional cost. And suddenly, right, you could do any transaction of 100 rupees or 300,000 rupees, and it's like 1/3, 1/3, 1/3. And if you can pay back early at the end of first month, like you pay your typical credit card bill, you get 1% cashback or 1% rewards, your choice. So what you're fundamentally offering to the user is flexibility, where they can trade off this 1% reward for paying over 3 months. Now, think this is a segment of customers in the entire credit card and otherwise who wanted this flexibility for long. They wanted longer credit periods.
Yeah.
And now they're getting longer credit periods by just trading off the rewards, right? So a very important segment that will emerge who will take this product. Similarly, many others exist.
Yeah.
And that's our thesis. That's a second thesis. So large market, better product with magical experiences, more features, and sub-segmentation in the market. This is what led to the idea of Uni.
Fantastic. That's super, super interesting. And maybe just to think of the broader context of the India market and comparing to other markets. So what's happening in some of the other countries in the world, right? Like US, China, Southeast Asia, Europe, and what's unique about India versus those markets, and what are some of the interesting things that you think will happen in India on the personal credit and credit card space that makes it very, very different and interesting?
Yeah, great question. So I will take instances across the world and across time as well. So if you look at India today, right? India, at least from a credit card market, it's a very high ROI product for banks, ranges from 5.5% for SBI cards to 7 to 8% for somebody like a HDFC bank. And it's a flat APR market. So if you revolve, you almost end up paying 40% across banks plus GST. If you compare the maturity of the Indian market in terms of product, it's very comparable to US of 1980s. In 1980s, every US bank had a ROI of 5-6%, had a flat APR, and a very flat value proposition of convenience and line and rewards, right? But then Capital One happened in early 90s. And what Capital One did was it started segmenting the market by different risk and started offering different prices. It offered a 5% APR to a super prime. So in 80s, the entire US market was priced at 20% APR by the way. So they offered 5% APR to super prime. They offered 12% APR to prime. And they offered 40% APR to subprime. And suddenly the best risk customers moved away, right? And the market segmentation started to happen. The ROI of the industry came down by about 30-40%, but the market matured. From 1991 to 2000, right? The number of cards increased by 8x, whereas the number of amount of balances increased by 3x only. So basically, people got spoiled for choice. Better customers got better products.
Yeah. And did it also happen that a customer started buying multiple cards for different use cases? So I used one card for large ticket purchases, one card for points, things like that?
Things happen, right? That's why the number of cards exploded by 8x, while the balances grew only by 3x. But clearly, people who build better products for a specific customer segment won, right?
Yeah.
And that's why Capital One, from being nobody, became like the 6th largest issuer in US.
Yeah.
In India also, something similar is bound to happen. The sub-segmentation I spoke of. Right? This sub-segmentation has happened in a very big way in US, in most developed markets, but has not happened in India. So that's first trend that I see. And carrying this trend, right? If you look at companies like Tinkoff in China, Tinkoff in Russia, or your new bank in Brazil, right? They also offered better risk products or cheaper cost products to better risk customers, and they took away meaningful customer segments from the existing financial services space. So that's one thing. The second trend that I see across the world is that if you go talk to a JP Morgan or a Chase, and I'm talking about a large bank in US, if you talk to a new bank in Brazil or a Tinkoff in Russia, right? They meaningfully upped the game in terms of customer experience. They said, you know what, the customer deserves far more, far better. And therefore, the experiences they created for the customer started bordering on that word called magical. Yeah. Both these trends will happen in India as well. Right? The experiences of financial products will become magical, and different risk segments will get access to different risk pricing.
Can you give an example for our listeners in terms of what were some of the things they did that made it magical? Tinkoff or JP Morgan or New Bank?
So think of it from a perspective of the app, right? Today, most banks have a great app. They functionally work great. You log in, you can see your statement, you can go in, you can book an FD, you can do all of those things, right? But it's still functional in nature.
Yes.
Now imagine this, right? If you think how today a net banking page looks like, It almost looks like a Yahoo screen of 2000. Too many links, and it's your job to figure out what links does what, how to do what you want. An intuitive search box would just make this experience magical, right? I go in that search box, I type in what I want, and it happens for me, right? Today, that technology exists. Doing something like that will be a magical experience. It just misses. It doesn't exist.
Yeah.
Imagine something like this now. I do transactions. Think I'm a credit card holder. I do transactions. Just getting to know how much I spend on Zomato or Swiggy every month. How's the trend for the last 6 months? How is my spending on food and beverages overall? And me being able to set a rule that don't let me spend more than 5,000 rupees or 10,000 rupees in a month on food and beverages is good for budgeting, right? And none of this exists. All these are magical experiences which have not been built. What Nubank built or Tinkoff built or banks built, right, were more specific to the customer segments and the problems there.
Yeah.
So, for example, if you look at some of the European new banks, right, they just solve the payment problem because there are so many countries, I have to exchange my currencies. There is this, there is that. Just solving for payments and making payments seamless and zero cost was big. In India, payments is not an opportunity from bank account because UPI has solved it. So every country have their own set of problems, but there's an opportunity to take some of those problems and create magical experiences around it.
Absolutely. And what would this look like in the context of uni or India? Like, obviously, the good part about India is we've built all this public infrastructure, right? UPI, Aadhaar, and a bunch of other things are coming up also in the near future. Yeah. What do you think fintechs like you on the credit side or others would do to take advantage of some of this public infrastructure and build these magical experiences? Like, what would that look like?
So imagine this, right? Let me talk about a little bit of our roadmap for the future.
Yeah.
Today, if you look at any credit-led payment product, right, it solves some use cases really well. It would solve for me making a payment over a Visa really, really well. I can get access to 0% EMIs across stores quite easily.
Yeah.
Right? BNPL networks are available for rent in India. Very unique thing about India, by the way. The thing what Pine Labs and PayUs and builders have done. However, there are certain problems which have not been solved well. Right? Me paying for international transactions without surcharges, or a great set of add-on cards for my family members. Right? Those are problems that are credit cards have made an attempt, but not beautifully solved for. There's no magical experiences around it.
Yeah.
And then there are things that credit cards or credit-like payment products don't even attempt. For example, UPI is so beautiful. It works seamlessly, the best customer experience. The QR code has made payment to anybody like really, really easy. But why does it not work on credit? Why do I have to, why does my bank account get littered with that 50 rupee transaction and the 300 rupee transaction and 20 such transactions which are not clean for the end of the month, right? Why can't my UPI work on top of a credit card?
Yeah.
But you can, right? Today, UPI is allowed to work on top of a bank account and a PPI.
Yeah.
Bank has both. Bank can easily issue you a virtual account or a PPI account and make it work, but they haven't. Right? So that would be one example of taking the public infrastructure of UPI, mixing it with the credit and making it happen. We plan to make this happen. The second thing that I'm very excited about is that what Uni is trying to do is say,
sorry, Nitin, maybe we should just pause. Not everyone knows what PPI is. So if you can just elaborate a little bit on that.
So PPI is prepaid card. According to NPCI, you can make a UPI work either on top of a bank account or a prepaid account.
Got it.
And for prepaid account, you can get a PPI license separately from RBI, or if you're a bank, you by default have it. And since bank has already issued a credit card, for them to give you a virtual bank account or a virtual prepaid account is straightforward. And then making UPI work on top of it is fairly straightforward. That's what I mean.
But isn't there any issue around MDRs and stuff, because credit cards are typically funded by higher fees that the merchant pays?
UPI, how much will a user pay on UPI? Right, $10,000. Today, credit cards anyway support utility payments, insurance payments on credit cards. What do you think is the MDR for utility payments and insurance payments? Almost zero.
Yeah.
It doesn't matter, right? The reason banks enable this is because they want to capture more payment use cases and get more balances. UPI is another such problem. All banks have to do is take the initiative and make it happen. Similarly, if you think about it, right, today rents is exploding as a use case across the industry. But a user is forced to pay a 1% surcharge. Why? Because when you go and pay on Cred or No Broker or Paytm, they all charge 1% markup. And this 1% markup flows, a part of it flows back to the issuer. And the issuer anyway gives rewards on top of it. Why not, as an issuer, make it free for the customer to pay rent, pay school fees, do solve for such use cases, right? It's very straightforward. The underlying IMPS infrastructure or payout infrastructure to pay to any bank account has been built by the, by NPCI and by the banks and by RBI. You can just leverage them to do more. Right? You need intents to do that. That's still missing otherwise. So these are some examples of how you leverage existing infra to create something even better for the customer.
Yeah. And this can almost, this can in some ways, the credit card experience in India can be significantly better than any other country, right? In that way, because UPI is almost ubiquitous; it's there everywhere, and because of that, and layering on top of all this public infrastructure can make this an even better experience for users.
Exactly.
Yeah. And what are the biggest challenges? Like, where do you see the biggest kind of stumbling areas where you think will prevent you from actually making this magical experience? Are they internal? Are they something that's more regulatory driven? Like, what prevents it, or is it just a matter of time?
So there are two kinds of challenges. The first kind of challenge is that you're working with multiple parties, right? With banks to get access to APIs. The regulator allows access to certain things only via regulated institutions. Those regulated institutions are also of many kinds, right? There are networks, there are banks, there are multiple set of players. All these integrations take time because security is paramount. You have to do it the right way. A lot of guards standing in between to make sure that things don't go wrong, at least from a security and data perspective. So those integrations are non-trivial and take too long, right? So that takes more time than what you want to do or what you want to take. You want to run faster. So that's the first thing, but it's happening, right? I see things moving at much faster pace today than it was 3 years ago. Like significant difference of almost like 5x difference. And I feel that.
And what's resulted in that difference? Is it all these? There are lots of new startups that are coming out and integrating with banks, providing APIs. Is it that, or is it the banks themselves moving forward?
I think both, right? The banks have become more versatile and have built that APIs. They've set up the tech teams and built those APIs. And there are these startups who have worked with the banks and integrated with them so that those APIs can be distributed more freely. A great traditional example is payment gateways, right? When I pay you, I would integrate with these banks APIs, and then I would freely give out these APIs to the other side of the world, right? Now this is being done across variety of use cases, credit, non-credit, banking, etc. Right? So that's happening at a fairly fast pace. So I see a 5x difference between 3 years ago and today, and I expect a 5x difference between today and 3 years from now.
Fantastic.
The second thing is responsible behavior with people who are particularly involved with credit. We know the entire Chinese issue that happened, right? Where Chinese apps were giving out payday loans and then were using coercive tactics for collections. Fly-by-night operators trying to make quick money. Irresponsible behavior. The industry is regulated. There are regulations to be followed, like KYC. Lending should be done with licenses only. Then, in lending, what happens is over leverage is a big problem, right? To the same customer, I'm the first guy to give a loan, I gave it right. But if the second guy, the third guy, and the fourth guy behaves irresponsibly, then each guy is increasing the risk of the customer and default for the entire ecosystem, right? So irresponsible behavior is actually the 80% of the problem. If some people in their view of growing faster, give credit irresponsibly, or increase customer leverage, or don't play by the regulatory rules, right? They hurt the entire ecosystem, hurt the entire sector. So behaving responsibly by all participants is very, very important. That I would say is the 80% of the risk, responsible behavior, and 20% of the risk is this other thing.
Awesome. That's super, super helpful.
Yeah.
And if you were to say this is on my wish list of things that change the next 3 years, like you said, it's 5x better already in the last 3 years, and you expect it to get 5x even better in the next 3 years in terms of like fintech APIs. I'm sure like bureau, like people getting onto bureau also helps a lot in terms of responsible behavior from the personal side of things. What else do you wish for that you think that will accelerate this even more and take India to the next level in terms of credit-led infrastructure for cards as well as other credit products?
I think data participation will help a lot. So bureau, if you look today, right, bureaus basically became mainstream after the 2008 crisis. And today, about 190 million Indians have bureau data. And bureau, if you are thick on bureau, if you have a lot of data on bureau, right, bureau-led underwriting or bureau data-led underwriting works very, very well in predicting this. Now, there are a lot of areas where a customer has a lot of other orthogonal data. Banks have your data. An account aggregator is a great initiative to be able to easily access your banking data and therefore underwrite your data. But then there are these third parties too, right? Ola had certain data, Zomato has certain data, Amazon has certain data. Each of these data are not enough to underwrite independently, but is good enough to improve underwriting a bit more. And you see this thing happening where more and more players are now making customer data accessible basis consent. So for example, I'm a large B2C brand. I made a score to predict income or predict credibility of a user. Then if a user gives consent, then this B2C platform is willing to share the data for a fee. So they start behaving like a quasi bureau, leveraging their own data. As more and more participants did this or do this, right, it helps the overall ecosystem. Of course, this is post customer consent, so all privacy concerns are taken care of. But this can be powerful in acceleration because it helps in determining a good customer from a bad customer better.
That makes sense. So like basically there's a lot of walled gardens today, right? Like there's the Google ecosystem and the Flipkart ecosystem and the Amazon ecosystem, etc. If there's more data that's shared between all of these through some sort of third-party mechanism and made accessible, that'll significantly increase the amount of data available.
The first thing that has happened is that all these ecosystems have actually built scores for the consumer. That has happened, right? Everybody has been thinking about it.
Yeah.
And the second thing which has to be done is that basis customer consent, these platforms start behaving as quasi bureaus. So bureau is a nice business, right? It works as a business. They get paid for holding their data and supplying their data. Now, similarly, these different platforms have a lot of data. They have processed it. They have made scores out of it. So it's not raw data anymore. But for a feed and basis user consent, they can provide the data, thus helping expand the ecosystem. Now, some of these players will have their own ambitions to build, credit businesses or financial service businesses, but not everybody, right?
Yeah.
And there are many such platforms, many such platforms. So the platforms who have their own such intentions, sure, right? But the others, they should build this and accelerate this.
That makes a lot of sense. And I think
OLX and Quicker, right? OLX and Quicker has information. I don't know if they ever intend to make a credit business, and they can use that data to benefit a lending company in some ways.
Yeah, absolutely. I mean, I think about even like for D2C brands, right? They know which customers cancel orders, which customers are returning goods. So all of this data can help triangulate like better and better customers.
Or think Naukri and Shine and Monster, right? So much data. I don't know if they ever want to build credit businesses. So that opportunity exists.
Yeah. You just have to think creatively, but and then you can use this data.
Yeah.
So the other thing that comes up a lot from some of our fintech founders, right, is how do you manage regulators in this space, right? In fintech in general, definitely in any credit-led business, managing regulators is paramount, right? You want to be on the right side of regulations for good reasons, right? Not you can't just break things, right? Like so you've obviously done this in various avatars, in PayU, in Ola, now in Uni. How do you think about this? Like, what's a good way to think about? What's the right framework to think about managing regulators? How do you kind of like do this on a day-to-day basis?
So from a regulator's point of view, right, I follow some frameworks, right? So first of all, park 10 to 15% of your engineering and product bandwidth for regulatory issues. Just park it.
Yeah.
Because then you will, these are continuous problems to be solved, they're continuous needs. So park 10-15% of your bandwidth. Once you commit to that bandwidth, right, things will become far easier.
Yeah.
Second thing is there are certain things about regulators which they are very clear about. First, if you have a license, right, then what that license allows you to do, and if you don't have a license, then what you're allowed to do. Those things are very crisply, clearly defined. How do you make sure that from a licensing perspective, those are extremely well solved for is the first part. So if you don't have the license, then aim towards getting that license. But license is a very, very important solve and operating within the constraints of that license.
Makes sense.
The second solve is around KYC. Most of us try to find the most efficient form of KYC. I realize that with KYC, you should have all solves. Because which form of KYC may work tomorrow, may not work tomorrow is unknown. Having ample backups is very important. So embrace all forms of KYC, keep working on improving on them. So a flexible onboarding journey is extremely critical when designing your core product, where you should be able to change your onboarding journey on drop of a pen. The last thing I would say is that take external opinions often. Now, when you're working with partners, their compliance will give you a view and have constructed opinions around it. You can hire the big four, you can hire leading lawyers, you can work with ex-RBI officials. See, RBI will never tell you and give you a direct opinion, but this world will, these consultants will. Work with them closely, get their opinions, and it helps you be better. So this is my framework, right? A, commit bandwidth. B, what does a license allow you to do, not allow you to do, make sure that you are operating on the right side of the line there. Embrace KYC fully, right? हर तरह का KYC करना है, जैसे मर्जी करना है. Lastly, get opinions from the external world. If you don't have your own licenses, then always work with two financial partners. Always.
Got it.
That's the least you can do. If needed, work with more than two. But if you don't have a license, because we have seen enough situations where nobody's too big, not MasterCard, not American Express, not HDFC Bank. That means working with one financial institution can be a business continuity issue if the partner does something wrong.
Makes a lot of sense. Makes a lot of sense. Super helpful. So we're coming up on the end of time, Nitin. Any advice for our aspiring entrepreneurs, fintech entrepreneurs who are listening into this? What are some of the exciting areas that you may not be working on at uni, but you hope that others pick up and work on, whether it's in the credit space or outside of that in fintech in general?
I think financial services space where you pick up a stone and throw, you'll hit an insight. So it's very exciting time to be in this. I will just ask for two things. First, if you're making an observation that anybody else can also make this observation after 1 week of effort or 1 week of doing secondary research, then that insight is not good enough. There will be at least a dozen teams on that insight already. Find a level 2 insight, which means in that domain, you find an insight which others have been missing out. Right? So very, very important. And level 1 insight,
What was that for you when you started uni?
This fact that most people once or twice in a year go through cash flow issues.
Got it. Very specific insight with a deep enough, specific insight, but with a deep enough market.
Yeah. And my second recommendation would be that if a traditional player is not doing it, it's most likely because of a regulatory constraint. Understand regulations better and speak to all those players. Why are they not doing it? If they say economics is the reason, then you can solve for it. If they say regulatory is the reason, then go deeper and understand what is that regulatory issue. So those will be my two recommendations.
Awesome, Nitin. This has been absolute pleasure as always, and a lot of interesting insights here. So look forward to seeing you again on our show in some other capacity, and look forward to seeing the continued success of uni, where we are very excited about it as Accel, and look forward to continuing to back you there.
Likewise, man. Likewise. Thank you so much.
Wow, that was a terrific conversation about what is now a ubiquitous product and what might be its radical future. I enjoyed it very much, and I know Rachit and Nitin did too. Thanks to both of them. All the best, Nitin, for what you are trying to build with Uni. And we hope your story and vision gives entrepreneurs something to think about and be inspired by. Please subscribe to our podcast if you haven't already. Our website is seed2scale.com/insights, where you can find other such insightful episodes from our series. That's all from us today. Stay safe. Thanks again for listening. Goodbye.